I am Jim Jockle and welcome to the Watch List. This week marks the first anniversary of the Treasury Flash Cash, and joining me today to discuss this is Head of Market Structure and Technology for Greenwich Associates, Kevin McParley. Kevin, thank you for joining us.
Jim, thanks for having me.
So let's just start right up. What, if anything, has changed over the last year?
You know, from a regulatory perspective, I don't think a whole lot has changed. There's been a lot of talking. We saw that really interesting paper come from the Treasury Department examining what happened that day, but they didn't. You know, there was no smoking gun, right? I think this is just what happened on October 15th a year ago was a reflection of newer, more complex, faster markets.
But one of the things that has changed is the market participants themselves. So what are they doing to kind of protect themselves in this environment?
Yeah, so it's an interesting point. So we put out research just this week that tried to dig into this in a little bit more detail. And it's really the way that the market's participants interact with one another, those lines are starting to blur. So you have traditional investors that obviously still look to the big primary dealers to do their bigger and complex orders, but we're seeing increasing use of electronic trading, not surprisingly, between dealers and customers, so that's about 50% of volume today. And then the other bit that's changed is how then the dealers interact with the interdealer market. So it's become pretty common knowledge that the principal trading firms have become big players in those interdealer markets over the last 10 years, but it's sort of become increasingly so in the last 2 or 3. So that's interesting. But the other interesting change has been some of those principal trading firms are now providing direct liquidity to the dealers to help the dealers provide liquidity to their customers. So that's a big change. And then lastly, in the paper we go through, there's about 7 new initiatives for electronic bond trading platforms. Some coming from the incumbents, the BrokerTec, eSpeed, TradeWeb, Bloomberg, but some startups in there as well. So it's early days, but this is a market where it's very liquid, it's very standard. There's a lot of market participants. So compared to other markets that are seeing slow growth in electronic trading, adoption Treasury seems ripe to see more growth here.
But one of the things we've chatted a little bit about before is as it relates to kind of Volcker, right? So obviously Treasuries can be held. However, for prop desks, the derivatives, the swaps, futures, and things of that nature to hedge that risk can't be held. So perhaps to give us a little insight as to what is going to drive the fundamental change here.
Yeah, so big change from say 10 or so years ago when almost all of the big banks were actively making markets in the interdealer platform. So and by making markets I mean sort of constantly sitting out on the bid and offer all day. In our study that we just put out, less than half say they're still actively making markets, and a part of that goes back to, as you said, to Volcker. So government securities are exempt from Volcker. You can prop trade U.S. Treasuries as a bank. But you cannot prop trade Treasury futures or interest rate futures or swaps, which are, as you said, some of the primary hedging tools if you are making markets in Treasury. So for a lot of those banks, they decided if we don't have these hedging tools, it's not worth it for us. We don't feel like we can be as effective as market makers as we had been in the past, and they backed away.
And yet, even despite recent volatility, right, and the safe haven as Treasuries as a safe haven, you're still seeing really low rates on new issues.
Yeah, it's completely amazing. There has to be some long-term repercussions of these low interest rates. We just unfortunately don't know what they will be, and I'm sure the Fed is spending countless hours and days trying to figure out what that could be and how they mitigate it.
Well, Kevin, I want to thank you so much for joining us, and that's your watch list this week, and happy anniversary.